Hello, everyone. Welcome to another edition of Fintech News. I'm your host, Nicholas Belvo. We're joined once again by Cigar, our head of research here at Fintech Cadence. Today, we'll be covering 4 topics, 2 in featured startup sections, and then 2 in terms of the news. So we'll be starting by speaking and explaining about PrimaryBid, a startup out of the UK that's actually really interesting, offering discounted shares. We'll be then moving back to Canada, speaking about Paybright, a startup out of Toronto. Then in the news, we'll be speaking about Monzo's blocking feature, which is really interesting. And lastly, Radius, a company of the US, which offers a new savings, checking, and reward system in their platform. So to kick it off, we're going to start by exploring these 2 startups that we want to talk about today, and starting with PrimaryBid. So you want to tell us a bit about, start with the elevator pitch. What's PrimaryBid all about?
Oh boy. PrimaryBid is democratizing the investment and share issuance process so that retail investors can take advantage of the same options or same deals that institutional investors get. So what this really means is people like you and I can buy shares of a publicly listed company on the same price that are afforded to retail to institutional investors.
Right.
So it's a cool concept, something new, something that we haven't really.
Well, we've never heard of it before,
right, yeah.
and why it? Well, it just came up because they just raised a round,
right?
And the Cooperathon is coming up next month, kicking off October 2nd, and throughout this month of September, what we wanted to do is showcase startups and news in general, featuring work being done in terms of financial health. And this is one of them because it's making investing more accessible, democratizing investment. And we just want to showcase all the startups working in this field. And if you're interested in signing up for the Cooperathon, by the way, or want to learn more about it, there's a link in the description so you could check out everything about that. But yeah, back to PrimaryBid. There's a little announcement. Why is this like popping up now, and what?
That's a good question. I don't really have an answer to that. I really want to dig deeper into this startup and understand what kind of business model they're using, and I think it's just a general trend about people becoming more aware of their finances, people getting more interested in investing. So yeah. I believe that's probably one of the reasons that a startup like this came into existence. For the obvious reasons, it's I don't know. It's really, yeah.
Well, the CEO of PrimaryBid said, every day investors are a vital part of the stock market and are yet unable to buy discounted share deals, a long-standing imbalance in the public markets. Our online platform addresses this challenge, giving small investors the same access that traditionally afforded to large institutional investors. So you're really buying it at the same institutional level, but for the everyday person.
When I studied finance, it was something really unheard of, and institutional investors always have this first dibs option or privilege, and retail investors are less educated and they're more let's say riskier for a company to invest in there, which is why they get whatever is left or at a higher price. So really interested in understanding their business model as to how they make that happen.
Yeah. Cool. Let's move on to the next one. Paybright, 30-second pitch. Let's go.
It's point of sale financing for anything that you want to buy or any service or product that you want to buy. A big gap in the market, and these lending institutions have been popping up all over the world, and it's no surprise that they're in Canada as well. Yeah,
like we've done an interview with a founder from with Bertrand from New Zealand, who launched a company like this in Australia and New Zealand. So it's essentially buying now and paying later.
Right.
Based out of Toronto.
If you go to Best Buy, if you like a TV, that's $5,000. You don't have the cash as of now. Use point of sale financing to make that happen. Maybe paying a medical bill also is if when it comes to more of a useful, I would say, use case for these kind of lending institutions.
Right.
A lot of people have the credit score, and but they don't have the limit on the credit card. So that's a good way to get the financing.
Yeah, and so they raised $34 million in growth equity. And we're also featured as one of Canada's top 50 fintechs in the DFI list we covered. They featured there as well. So,
cool.
Yeah. Okay, great. On to now the news of this week. We want to speak about Monzo that launched a new blocking feature. So originally they had this in terms of gambling, but now introduced it for any vendor essentially, right?
Any vendor in general. So just like you can block certain websites like Facebook or LinkedIn or any other social media website when you are working and you want to focus on work only, you can block merchants on your app so it's basically stopping yourself from going to a merchant or making purchases. So
yeah.
A really simple example that they gave is if for a person who's trying to lose weight and wants to block all fast food companies or restaurants from his life. So just block it on your app and you can't pay for those anymore.
Well, you can't pay for it with your credit card or any card associated to the app. You could still go with cash and work around the system or get your friend to buy it. But, excuse me, it still gives you that at least mental awareness that you're trying to stop a habit you might already have. And it's giving you that, maybe that extra layer of like you go and, I can't use my credit card. I told myself in the past I didn't want to do it.
It's like a constant reminder,
Right.
Especially when it happens when you also switch from, let's say, credit and debit cards to using cash only.
Absolutely.
You give yourself a budget of $10 and you become more cognizant of what's going on.
And see that once again really fits into financial health. Also, in the example of fast food is just general personal health. But it's an original, innovative way really to approach a situation. It's not every day that well, it's the first time we hear of a blocking feature in terms of fintech having that, because we've seen it obviously in universities. A lot of people use that to not get distracted by social media. But really innovative use of Monzo not allowing you to buy stuff for your well-being. Lastly, Radius. You want to chat about that?
Radius. So we spoke about Radius in the last edition as well, last week when they collaborated with North One. So we dug in a little deeper into what they do. They're like a neobank, and they're going against other neobanks in the US as well. I think Green Dot is one of their biggest competitors, and one of the biggest. So they started out as an app and a prepaid debit card. Now they want to extend their facilities to a full-fledged bank, and that means getting deposits. And I'm quite sure that the next step would be lending. But for now, to increase the deposits base, they are trying to entice new consumers. And one way to do that is to provide facilities rewards, just like a credit card on a debit card. Provide an interest, a high, well, it's not that high, it's only 1.99%, but it's still higher than a checking account, and allow the user to use the account as a checking account. The catch is that you have to maintain a balance of $2,500, but I think a lot of customers will be enticed to the offer.
Yeah, no, it's like, why is this? Because I feel like a lot of banks could probably offer this. Are they doing anything additional, or it's a marketing ploy or a new offering that?
It's more of a customer marketing. They're a new bank, so they won't have any physical branches. That kind of allows them for cost savings, so they can afford to provide the consumer, so they can transfer the cost-cutting benefits to the consumer. So they provide a higher rate of interest. And again, if the neobanks have to survive, they have to provide that entire suite of products that a traditional bank does. So that's how I see the evolution of a neobank. First, they start out with a prepaid card like Koho at the moment in Canada is. Then they move to deposits, because deposits allows an financial institution to make loans, which is like something in economics. It's called the multiplier effect or on an economy level. But banks usually need to have some amount of deposits so that they can extend loans. And lending allows a bank to make a lot of money on interest, and that's the right way to go. So
once again, an idea for people participating in this year's edition of the Cooperathon to find out, which neobank potentially would be the best for you, because moving down the road, you could earn a higher return by if you have that $2,500 into putting in traditional institution, you could look at these neobanks and have a higher yield.
Tangerine, for the moment, for instance, gives a higher rate of interest as compared to other banks in the US. I was surprised when I opened a Tangerine account that if you deposit money for certain time periods, you get a higher rate of interest as compared to Scotia or RBC. So it's just a way to transfer the benefits to the consumer.
Yeah, really cool. All right, well, thanks, Sagar. That's it for us today from FinTech Cadence at FinTech News. Make sure you check out the companies we listed, and if you're interested, once again, in the Cooperathon, check out the link to learn more, and have a great week, and make sure to tune in next Tuesday at 3:30 p.m. for another edition of FinTech News. See ya.